Good day. My name is Sabir and I'm the Chief Executive and Chief Investment Officer of Lunar Capital. Today, I will take you through Lunar Capital's performance to date and to recap our investment strategy. First and foremost, Lunar Capital is a wholly owned black company, 29.5% of whom are black women. We are regulated by the Financial Services Conduct Authority in South Africa, and part of our regulatory obligation is to show you this disclosure, which can also be found on our website. So let's get straight into it. Numbers matter in our business. Today, we have assets under management of 156 million rands, split as follows. The Lunar BCI Worldwide Flexible Fund has 128 million rands of assets under management, of which 63% is invested offshore, primarily in the US, providing a very good hedge against the rand. Our offshore portfolio management offering for individual clients has 28 million rands of assets under management. The performance of our funds and portfolios is of paramount importance to our client and ourselves, as we are all, as directors and shareholders and employees, invested in our fund. The Lunar BCI Worldwide Flexible Fund lost approximately 0.5% of value after costs over the 1-year period. This particularly related to the market conditions over the last year. But over longer periods of 5 and 6 years, we achieved annualized returns of 8.72% per annum and 8.09% respectively, giving us total returns over a 5-year period of approximately 51.89% and over a 6-year period of 59.52%. These returns are after costs have been added. In the next slide, I will provide you with the context of last year's performance. Unfortunately, performance in the stock market doesn't go in a straight line or is smoothed. You can have negative years, and therefore investing in the stock market should only be considered if you have a long-term horizon, and long-term is basically 5 years or longer. We pride ourselves in being personally available to our clients on whatever questions they may have on their investments with us, why they should consider investing with us, or their own investments. Simply drop me an email at sabir@lunarcapital.co.za and I will make myself available to you, like many of our clients already have, to discuss your investment questions. Today we are proud to represent over 160 clients, representing over 105 families in the fund, and 11 individuals/families are also invested directly with us in the offshore portfolio management service, which is 100% offshore. Here we show you the performance of the markets over the last year, one of the toughest times in the investment markets, where almost all markets except for oil were down quite significantly. You can see the Nasdaq down 14% in US dollar terms, the JSE All Share Index approximately 1% up, and obviously the Lunar BCI Worldwide Flexible Fund 1 year to date over just under 0.5% loss in the portfolio. So let's talk a little bit about our investment philosophy. Our investment philosophy is encapsulated by growth at a reasonable price. We do this by firstly seeking out certain mega trends, then identifying those businesses that we want to own that can take advantage of those mega trends that are not overvalued in our opinion. And lastly, applying long-term thinking to how we want to invest. So let's start with the mega trends. Okay, and what are some of these mega trends that we have identified that we would like to be invested in? We think that technology is a mega trend, in fact, with the current focus on semiconductors to support the trend in artificial intelligence and cloud and cybersecurity. Cloud and cybersecurity in their own rights and artificial intelligence in their own right also provide significant opportunities for growth in our view. In the biotechnology space, the significant results in the treatment of two of the chronic diseases of our time, diabetes and obesity, provides hope for millions suffering these conditions. Almost everyone in the developed world is talking about these wonder treatments, particularly on how to treat obesity. Millennials, who apparently don't like to be called millennials, so apologies for that, are now the largest generation in the work environment. They also create certain investment trends with their buying habits and the values that they represent. There may be other trends that we may not have competencies to analyze at this particular point in time, and we try to stay away from those until we develop those competencies. So we like to think of ourselves as owners of businesses and not as traders of stocks. So we like those businesses that not only create innovative technologies, but also those that use technologies to create a competitive advantage. For example, in the retail and fintech businesses, where technology is providing significant cost savings and efficiencies and great experiences for clients. We look to invest in those businesses when their prices are lower than the value that we assess. Then we like to own those businesses for a long time, allocating funds strategically by having the right balance between diversification and concentration. So diversifying so that we are not over-concentrated, but not being over-diversified, particularly in areas where we see, or in companies where we see great opportunity for us to have a slightly more concentrated position. We particularly look for opportunities where others see risk. There's an old saying that says, be fearful when others are greedy and greedy when others are fearful. So we like to invest in those particular sectors. So how has our strategy played out and how have we invested? Here's a view of our allocation strategy. So you can see basically what we've split our stock allocation on is at firstly, how much do we want offshore versus locally? Then how much do we want in large cap high quality stocks, in mid cap stocks, in small cap stocks, and then in cash and bonds. So you can see that we do want a larger part of our portfolio offshore, and currently we are 63% offshore, 37% locally. In the large cap space, we are 47% in large cap, 12% in mid cap, 14% in the small cap, and you can see we have an over concentrated position in cash and bonds at this particular point in time, because we think there will be some opportunities in that space. So let's talk a little bit about some of the companies that we are invested in the high quality side. Companies like ASML and NVIDIA, great companies that develop semiconductors or computer chips for artificial intelligence, for cloud, for cybersecurity, for electric vehicles, a specific mega trend that we talked about earlier. Microsoft and Amazon, for example, are technology companies with great innovation in their toolkit, and certainly in something like Microsoft that has also invested in OpenAI, which is an artificial intelligence business that's the rage of time at the moment with its ChatGPT product. Novo Nordisk and Eli Lilly, for example, are two biotech companies that are in this diabetes and obesity treatments, and we are invested in both of those. Okay. Other people see risk in the banking sector, particularly the failures of some of the smaller banks in the US. And the banking sector took a bit of a hiding recently. We saw opportunities for some of these high quality banks like JP Morgan and UBS for us to be able to invest in them. And then companies like Walmart and ShopRite and FirstRand, for example, are great users of technology, giving them certain competitive advantages. And we like to be invested in those kinds of companies as well. In the small and mid-cap sectors, we have companies like Lululemon in the athleisure space, talking about the millennials who like to be in that in athleisure. And Palo Alto Networks and CrowdStrike in the cybersecurity business. Okay, so all of these themes that we have identified, in terms of these mega trends that we want to be invested in. As I said earlier, we also have a larger cash and bond position than normal, reflecting our view that there will be more opportunities to buy good businesses at lower prices than today in the near to medium term future. So on the offshore portfolio, the Lunar Capital offshore portfolio, there we have allocated basically into four buckets. The first one is really the large cap, high quality, non-technology companies. Okay, we talked about Novo Nordisk and Eli Lilly in the diabetes and obesity treatments. You should all know BMW and VW or Volkswagen, well-known brands that are trading cheaply in our view, that have made large investments in the electric vehicle offerings. And we think that once they start rolling out in that particular area, there will be good returns to be made. LVMH is a luxury goods business, French goods business. You should all know Louis Vuitton. So that's a business that we are invested in. And ITX is a retail company, better known for their branded shops, which is called Zara. I think many people shop in that area, particularly the younger folk like the millennials, and they have great value clothing for everyday wear and for workwear as well. In the second bucket, we have technology companies like Adyen, for example, a Dutch-based fintech company. And then we've talked about some of the others like Amazon and ASML and Microsoft, etc. Okay. The third bucket represents what we call our regional kind of view. So in other words, if we are thinking that the Indian market will outperform other markets, then we typically like to invest directly in certain Indian stocks, but sometimes we want to be more broadly associated with that market. In this case, we would take something like INDA, which is an ETF, a low-cost ETF, which mimics the Indian market, and similarly the Euro Stoxx 50 for the Euro market, and the JPY 225, which represents the Japanese markets. In other instances in the ETF space, we might take a particular trend or particular result that we want to achieve. And in this instance, for example, we have got the high div ETF, which provides investments in high dividend companies. So we like to take those kinds of investments in that third bucket. And then obviously the cash and bonds. Now, the difference between the fund and this portfolio business is, firstly, in the fund you come in rands, and we will then convert those rands through the fund into US dollars, and we invest only in any entities listed in the US markets. Whereas in this portfolio, offshore portfolio allocation of ours, firstly, you would need to use your foreign exchange allowance and convert that into US dollars, and then we are able to invest that in any regulated market around the world. So you can see there we have direct investments, for example, in French companies like LVMH, in Adyen, like in the Dutch market, and certain other businesses as well. So those are basically the differences. The other big advantage of the offshore portfolio strategy is that once you've taken your money offshore, you can continue to keep that offshore. So that's basically the strategy here. And these are all individual portfolios, so it's not like a fund where everyone is kind of pooled together, and we manage this basically on a model portfolio, and this is a view essentially of the model portfolio. So this table basically shows you the top 10 holdings in the fund and certain key metrics. Now, I'm not going to try and take you through these key metrics, But really all I wanted to do was to say we like to be invested in businesses that have great cash flow, low levels or at least affordable levels of debt, a great return on equity, and excellent margins. And you can see many of our businesses meet that criteria, or at least in our view will meet that criteria in the near future. So that's basically what I wanted to kind of talk you through. How we invest in great companies, our strategy, and our performance to date. So lastly, just want to say thank you to everyone that's invested with us, and certainly those of you that have created an interest and have come to us for questions. I also appreciate all of our clients who always come to myself or one of my other partners to ask for advice. We don't give financial advice. That's not our business. But certainly we can give you a view, of how we think about the investment markets and what we think is are opportunities for areas to be invested in. So we certainly can do that. So if you would like to spend some time with me, if you have already, you can do so again, and certainly if you haven't done so, I encourage you just to give me a call. Email me at my email, sabir@lunarcapital.co.za. It's printed up there, and book some time with me. I'll take 15 minutes to discuss something. If we need a little bit longer, we can rearrange or we can continue that discussion. And we certainly would like to chat to you online and to meet with all of our clients personally. So thank you, folks. I look forward to engaging with all of you.